Welcome back to another episode of Rawstocks. I'm Rustic, and we are going to take a look at Tesla daily chart, see where price came from, where price is, and where price is likely to go tomorrow. With FOMC coming out, it could be a market mover, but let's go ahead and dive right into the charts. Today, we had a nice sell-off. We eventually rebounded partway through the day and closed just a little bit up. For those of you who are new and who are trying to follow along with the charts, I use TradingView, and we use a smart money indicator. I'll go ahead and show you that. It's this one by Lux Algo. It's called Smart Money Concepts. Happy to share my custom settings with you guys. If you want to get in touch with me, go ahead and drop a comment. I can get in touch with you and let you know how to set those. So for those of you who are new, maybe not experienced with TradingView, we're going to use first a trend line drawing tool. We're going to draw this trend line here. We're going to connect this low to this low. Second trend line I want to draw, if you're trying to follow along at home, is connecting these two highs. I like to make them look like a nice triangle and have a pretty apex there. It's up to you. You can extend them through however you want for your chart. But that's what we're going to go ahead and do because those are the two important things that we are looking at right now. Okay? And let's see what happened today. This is something we talked about in our video yesterday, was that if price wanted to come down, price was going to potentially test this trend line of support. Okay? We were connecting this low to this low. Now we got it where it hit today, right? So if we would have changed that to this low, we might have said that price barely broke below the trend line of support today. We'll just say it hit. Something else I want to note, and we've talked about fair value gaps before in the other videos, is that price also came exactly to consequent encroachment of this fair value gap. If you double click on your horizontal ray or your horizontal line, you can annotate the level itself. And I'm going to call this consequent encroachment of bullish or plus fair value gap. I like to add the time frame on there as well so that I can remember where that consequent encroachment came, because that fair value gap is going to disappear when I drop into other lower time frame charts. So price came right down to there, right down to the trend line, right down to the consequent encroachment. A lot of things we're looking for on charts when we're reading charts is confluence between different indicators, different structures, different things that we have as important on our charts. So right here we had a trend line and a consequent encroachment all at once. Price oftentimes comes down into consequent encroachment, can reject or can continue to head lower, but it does like that 50% of a fair value gap. That's what happened today. Right? So where might we be headed if we head any higher? Well, we also know we have a fair value gap here that's never been closed. I'm going to go ahead and just mark it off with horizontal levels. In previous videos, I've drawn it with a box, but we have a daily fair value gap here. So 1 day fair value gap. Same thing here. And it's a bullish fair value gap, so we use a plus to annotate that. Okay, so we do know that there's a fair value gap here as well. So that's something we're going to be watching for. Also, on the daily chart, we're going to note that we have a full gap here. We're going to annotate that with gap open, okay, gap close. And another thing I like to use is the 50% or the consequent encroachment of that gap. The consequent encroachment can be used for fair value gaps, daily gaps, or volume imbalances. So I'm going to use my Fibonacci tool. Okay, and I'm going to grab this high. I'm going to grab this low. I'm going to look right here. I have it labeled in gold as the 50%. Okay, and I'm going to mark off that. I use custom settings on my Fib tools. If you guys ever want, just drop a comment. I can certainly set you up with my custom settings, which also have extensions built into them. Okay, we're going to call this consequent encroachment of 1-day gap. Okay, so now I know that we got gap open, gap closed, consequent encroachment, right? So just looking at the daily chart, we do have a little bit of inconsistency or discrepancy in the chart where we just set a bearish fair value gap today with this wick to this wick, right? As bearish fair value gap because we're heading lower, but we also have bullish fair value gaps below. So what is that telling us? That's telling us that we could trade up into this bearish fair value gap, respect it and head lower, or because we're still respecting this bullish fair value gap, we could end up heading higher and just take out this bearish one and it becomes non-existent, right? And so what could that look like? Well, we respected this trend line today, but we do know we're coming to the apex, right? And because each one of these lines is a daily candle, and because of the way price normally moves on Tesla, we don't anticipate it's going to take us all the way till next Monday to make a decision to break out or break down. So we're looking for that move to happen this week sometime. This bearish fair value gap could be an indication that price wants to head lower and we're going to break this support. If we head lower, where are we likely to head? Okay, if we trade back up into this fair value gap, right now, just according to the daily chart, we're focusing on back to the consequent encroachment. We're focusing on the low of the daily fair value gap here. We're focusing on the fair value gap here that has also been left open, right? And so if we start taking those out, we can focus on even lower targets. But for now, that's what we have on the daily chart, okay? According to the daily chart, if we were to head higher, because we did respect this trend line of support, we are respecting this bullish fair value gap, and we have FOMC, which could be a market mover, right? Where would we be heading? We'd be heading up into this bearish fair value gap. We'd be looking to test the trend line of resistance. Above that, we got gap, consequent encroachment of gap, gap close, and higher we have an order block. We also have some liquidity built up in this wick. Let's go ahead and mark that off as well, is that this is buy side liquidity. And if we were to trade up to that, we could potentially see a double top. What makes me hesitant about a double top is this also has a little bit of a look of a cup and handle, that if we were to hit the double top, we could reject and head higher into the order block. So I'd be a little bit hesitant if we rejected perfectly inside this liquidity zone. I would expect some kind of reaction, but it might be just a small short. Again, lurking around that 300 range. Short, boom, pop up higher to set a new high into this order block that we never hit with this move back in July because it got stopped short just a little bit early, right? So those are some immediate targets that we're looking at. Let's go ahead and drop down into the 1 hour chart and see what else we have going on. Okay, so if we zoom in a little bit more, something I immediately notice is that we had a nice doji here where we hit that support perfectly and we rejected. We left the doji, it's kind of a spinning top, and we started trading higher from there. We also have a 1 hour fair value gap, and what I'm going to mark is a horizontal level on that consequent encroachment of a 1 hour bullish fair value gap. Okay, so that is annotated there as well. It'd be another area to focus on if we were to break that trend line of support. Take that consequent encroachment that we already took today of that daily fair value gap. Anytime we're retesting levels, it can be weaker than the first time we tested it, right? First test, you get a reaction. Second time, you might get a break. So we could break that. We could head down into the consequent encroachment of this 1 hour fair value gap, right? So something that's important to note. I'm looking at price ranges. I am seeing that there is a 1 hour unbalanced price range here. Those balances and unbalances, they are found, the way I teach them, they are found in change of characters and break of structures. So here we had a change of character when price traded back down through these wicks. character changed, left a character change indicator that we have not quite tested yet. So I'm going to annotate that as a unbalanced price range on the 1 hour chart, right? Again, I like to put the chart that I found it on so that I can make sure that when I'm on lower time frame charts, I know that it came from 1 day, 1 hour, or whatever the chart is, right? And why that's important is because oftentimes the higher time frame charts take longer to hit things just because of the fact that they're higher time frames. So they're also oftentimes related to swings, versus the shorter time frames often can rebalance in, single sessions, stuff like that. So we got that marked off, right? Still a clear picture that we rejected the trend of support. We have this resistance above. If we were to get higher, we could look to balance this 1 hour price range, and we could look to head up to that resistance trend line, right? If we were to break down, we'd be breaking the support, consequent encroachment, daily fair value gap, right? Daily fair value gap down here. So we got some upside, we got some downside targets. Let's go ahead and look at even lower time frames. Drop down into the 15-minute time frame. See if there's anything different that we see here that we didn't already see in the other one. Right? So something that I noticed here, and it's a previous day high as well, but I also noticed that there is a break of structure very close to the 1 hour unbalanced range, but this is on the 15-minute chart. So unbalanced price range, 15-minute. So I'm showing you guys exactly how to annotate your charts to draw out key levels that are likely to be targets if we head in one direction or the other. Okay, something I see below us, and it's very close and immediate, is that as price traded up off of that support level, that it laid a bullish fair value gap. Okay, as price inefficiently delivered to the upside, leaving that gap, it traded back down, didn't quite hit it, and chose to react, heading back up. Right? So we could just be walking this trend line up, eventually balancing these ranges and heading higher. We got an order block here as well. That's an area of interest. But we could also just see this come back down, take out this support level, and head lower. So nothing else that I see that's of great interest. I do see that there is a gap here. I will go ahead and mark that off as well. Technically, the gap closes from here because candle closed up here, started down here. I'm going to go ahead and mark this because I would rather target the candle body low on that. I'm still going to call it a 15-minute gap, just so I know. I'm not going to mark the higher because if we're heading higher, we're probably heading up into this order block, which also happens to be where our resistance trend line is. So we have a couple targets here that are all relatively in the same area, 270, 271, 273. So we'd be looking to take those levels. And again, the way levels work, you take one, you could potentially see the next one. When you take the next one, you could potentially see the next one, right? And where are we heading? If we do head higher, we're potentially heading up to the resistance in the order block, right? But we also have something that's developing that I think is worth noting as well. I'll go ahead and show you guys how to draw patterns. So if you select your pattern tool, here we got a head and shoulders. Okay, so something I want to notice is that we could look at this move here, and we could say left shoulder, head, right shoulder, right? It comes pretty close. We'll go like this, make it even. Okay, and we could see this develop. And where would that take us? That would probably take us back into this range here. Okay, so something to note, that if we were to open up or retest this similar level of support here on the trend line or near the trend line, we could see an inverted head and shoulders pattern play out that would take us up to balance the price range. Anything above balance price range is icing on the cake, and I've always taught that. And you can let it run, or if you're in multiple contracts, as if you're trading options, you could start to scale out as price is balanced and then see if it wants to target the gap or the order block or the resistance trend line. And if it starts to look weak, you can exit the runners. Okay, so I'm going to delete that, but we got the inverted head and shoulders, and I showed you how to use the tool. Anything else of importance that I see here? I do see some more downside stuff. I see right here, we got another break of structure that happened in a gap. I'm going to annotate that as unbalanced price range 15-minute. I don't annotate whether it's positive or negative, because if it's below us, it's going to be bearish direction. If it's above us, it's bullish. Right? So we're looking to balance those price ranges. So we got the 15-minute there. Let's go ahead and drop down into a 5-minute time frame. See if there's any last little bits of evidence of where we might be looking to target. So again, we got this 15-minute unbalanced price range. I'm not going to mark this one because it's so close, but we also have a change of character that happened here that I would say isn't necessarily balanced either, but nothing else to the upside that needs to balance. We also have another break of structure at this point, 256, but because we have the consequent encroachment just right below that, I'd say that if this price range here balances, we'd be targeting the consequent encroachment anyways. So I'm not going to go ahead and annotate that one on the chart, right? But similar look on the 5-minute, we got that, potential inverted head and shoulders that could take us into this order block up to these unbalanced price ranges, potentially the 15-minute. The last thing I want to note on this one is that we do have also a 5-minute fair value gap, right? And again, that consequent encroachment is really close to these unbalanced price range 15-minute gap. So not necessarily going to mark off that consequent encroachment of this 5-minute gap either, just because if we're already heading in this direction and we want to head higher like this consequent encroachment, we're most likely going to head towards that 15-minute gap anyways. So not necessarily worth noting. And again, if we're already pushing up there, we might see it head into the resistance trend line. So other areas that you could mark off if you wanted, depending on your time frame. If you're a day trader, you might only be using like the 1-minute time frame, and you would have probably caught some kind of change of character in that area anyways. So different time frames for different objectives. But right here, again, we also have an order block, which is going to be interesting. So we'll see if it takes this out and heads higher. Again, we could see the inverted not play out correctly, and we could see the support level broken, eventually trading down to balance these price range into the different consequent encroachments. So again, all things to be looking out for. There's no clear indicator of whether it's going to go up or down, but we do know that we're much closer to the support level than the resistance level. And so if we were to test this again and see it break down, high likelihood that we could start selling off and going lower. Last thing I'm going to do is look at today's price action and see if I can explain. A few of you guys who are watching the videos regularly have asked before if I could explain, potentially why I take setups. And so today we caught a nice short, and I want to explain how that happened. Okay, so something that I was watching for, and this was right out of the gate, was that we started trading up and then we started falling. And you can use your fib tool if you use the custom settings that I use to measure that retracement. So what I saw is that we came down here from swing high to swing low before we jump back up. You measure that off, and it happened pretty quickly. This is a 1-minute chart, so you got to be quick when you're doing these. But what I saw is that it traded back up into optimal trade entry. And so I really want to explain this to you because I haven't taught this so much in videos yet. But the idea of optimal trade entry is that you have a swing high, swing low, or swing low, swing high, and price then returns to around the 61.8 to 70% retracement of a swing high to swing low, or opposite, swing low to swing high. Okay, you enter in that zone, and you can take your entry wherever. And then on TradingView, you can use your risk reward or your short or long entry tool, and you could determine what your risk reward is. Okay, so what I teach is that symmetrical swing is the full extension, and stop loss goes back up to the high of the swing or the low of the swing, depending on what you're measuring. So what I want to show you guys is that specifically in this trade, okay, there was a 5.43 RVR that hit full symmetrical swing and ended up even going lower. Well, if you knew that we had a resistance, or sorry, support trend line down here, you could say there's a potential that it is going to fully extend and hit that support level. And sure enough, it did. The trade that I took was a full extension and nothing lower. I run a paper trading account and a live account. The paper trading account I let go all the way into this consolidation zone. I didn't get perfect exit on the support, but I did exit in this consolidation zone here. Okay, and then I ended up going long at that point because I saw that price was willing to respect this support level. But the optimal trade entry was this swing high to low, back up into optimal entry, okay, and then to full extension. It wasn't a significant move if you were following the full method that I teach, and that is that if you're in multiple contract lots, you scale off 50% back at the zero, which was, from the retracement back to the swing low in this case, right? You would be taking off half your positions there, and then another half of your positions here, another half here, and runners go to full extension. On my live money account, I took the trade, closed it at 11%. I didn't even let it fully extend because I was only running 2 contracts on that trade. On the paper account, I had more contracts and I let it run, and it eventually, I think, hit 25% or so. And we had a nice successful trade there. Called it out for those of you who are following me in Discord. And it was a nice setup, right? We had some other winners today too that went for 25% as well. And we had a final one that went, one of the trades went for 40%. So had a fair amount of success in today's market, but that's one of the things I look for. Okay, I'm going to take off the RVR. One last thing I want to let you know is that when price starts to run in your favor, you start to move your stop loss. So in this case, we enter here an optimal trade. Okay, very next 1 minute candle, price ran significantly in our favor. Okay, at that point, we're moving our stop loss so that we don't lose any money. And then potentially, if price continues to run in our favor, we can start moving our stop losses into profit. The goal of managing risk is that when price runs in our favor and we are in profit, we are not ending up losing on any trades. Even if you break even, you're not losing on any of those trades. So very important to understand how to manage risk in that way. If price does start running against us, which can happen, right? If we were to enter optimal trade entry and we headed back up to retest this high or pull into this order block, right? We would have taken that stop right here. And sometimes you got to do that. And that's managing risk effectively, right? Because what happens if you don't have that stop loss in place? Price runs higher, contracts burnt, shares are losing money if you're short or long or whatever the way the direction it's going. But either way, it's not managing risk effectively. So we're using our stop losses. When price runs in our favor, we're moving those stop losses, or we're exiting at break even or in profit. We're not losing on trades. Okay, something else I want to show you in that trade itself was that there was another bearish fair value gap that once price started running in your favor, there was a bearish fair value gap that laid. Okay, with this wick to this wick, price came back up into consequent encroachment. Right, very important. That's a algorithmic move where price will come back up. You see wick, 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 right? Price comes back up to test that same level, right? Efficient price delivery, right? And then price continued to respect that fair value gap and ran lower, right? So congrats if you got in on any of those trades. Nice money being made in those. So that's just one of the ways I look for setups, right? Another setup was here. I told you I went long in that setup. And I want to show you again using your fib tool. Swing low, swing high, right? Where did price come down to? A little bit further with a wick, but candle closed in the optimal trade entry. Okay, so I was long here, but you could also wait for the move to happen and the correction, right? Because the risk here, we don't know. We're hoping it respects this trend line of support. It was a great opportunity for an entry, right? But you could wait for the move to happen, come back down, optimal trade entry, okay? Back up to the swing high in this case because you're long. Let's look at what the RVR would be on an entry here in optimal trade entry. Okay, we're going to be looking in this case at a long position. Okay, and targeting full symmetrical swing would be up to 68.69. Okay, the risk on this one would be back down here at the low. Okay, it's a 5.92 if it runs the full symmetrical swing. Let's see what happened today. And again, if you're scaling in and out, if you're running multiple contract lots, you're scaling out 50% when we get back to the 0 level. Okay, so trades up, optimal entry, stop loss, right? 50% of your contracts come off at 0, which was a return to 265. So this move from 262 and some change to 265 had a nice payout just in that, right? We chopped around a little bit. Okay, price ran up all the way to a third price target, right? So if you're running a multiple contract lots, you're scaling off 50% here, 50% of the remaining contracts here, okay, 50% of the remaining contracts here, which you can see we also hit. And let's go ahead and extend it further and see we didn't quite get to full symmetrical swing. Okay, so that trade is still in play. We could be looking, just because we ran out of time doesn't mean it's still not an applicable trade. So let's extend that out just for the sake of argument and looking at it and what that would look like and where we can find some confluence, right? Let's pull it out even further. And so we're going to be looking at tomorrow, right, to get up to 268.77. And that would mean that if we were to get heading higher, which this looks all right, we could see it return again back down, test this support level and head higher. We can just see it start to head higher, and we'd be looking at returning to this fib level, order block, symmetrical swing. Okay, certainly a possibility. We'd be taking the buy side liquidity that's here, right? Could we head up into balance the price ranges? Certainly could. It's FOMC day, right? Anything can happen. But at minimum, if you were still in this trade and you were swinging, you'd be looking for 268.77 as a minimum, right? But we also know there's higher targets, so we'll just have to see what happens. But that's just another example of how to use optimal trade entry, right? And again, that RVR was nearly 6. And when price started to run in your favor, you're moving stop up to break even. Then you're moving stop up, right? As it went even further in your favor, you're moving stop up to here at 265. We never traded back down to it, right? So no matter what, you're taking profits in that trade, right? That's appropriate risk management. I can't stress that enough, right? If you want to maintain your portfolios, especially if you're managing small money portfolios, you need to know how to use those stop losses, how to use your RVR, and how to have very optimal entries, very precise entries that give you opportunities to have lower risk with higher reward chances, right? So I hope you guys like this video. I did a little bit more on the educational, a little less on the projections of where we're going tomorrow. I am really interested to see what FOMC brings. I hope this has been helpful. Go ahead and like and subscribe if you want me to continue to come out with this content. I love the support I've been getting lately. And if you like these educational videos, I can certainly spend more time talking about how to use the tools, talking about how to use the methods that I use that give me those precision entries that have very good payouts on the trading days. So thanks again for the support. I'll talk to you guys tomorrow.